have a chat about DeFi, the state of the nation, life after a difficult 2022, and where next from here. So just to kick off with some quick intros, my name's Chandar. I'm a principal at Mosaic. We're an early stage venture capital fund based in London. We've been investing in blockchain companies for a pretty long time now, since 2014, and investing in DeFi companies since 2017. So we've seen a few market cycles, and we wanted to take some time to pause and reflect on where we are today. So maybe we've got a great group of panelists here, so we'll start with some quick introductions. We'll go across the row, give you guys a chance to introduce yourselves and share what it is you're working on. So maybe let's start with you, Ali.
Okay. Hi, I'm Ali. I'm a co-founder and technical lead at Gridex. We're the first fully on-chain order book protocol built on Ethereum, and we're looking to bring the trading experience of a KEX to DeFi.
Hey guys, my name is Alex. I'm the founder of AngelBlock. AngelBlock is a protocol focused on non-custodial fundraising, so we do everything that is based on-chain, verifiable, from raising funds for crypto to essentially token distribution, on-chain cap table management, and verifiable on-chain investing. And my background is in centralized exchanges and venture capital and angel investing.
Hey everyone, Francesco here. I'm the chairman for 1inch Pro and also the CFO and CBDO for 1inch Network. 1inch is a one-stop access to DeFi. We are mainly known for our aggregation protocol, where we had roughly 300 billion transactions since the creation.
Yeah. Hi, my name is Ivo Grigorov. I'm co-founder of Credefi. So my background is in traditional finance, mainly risk assessment and credit risk assessment. So yeah, Credefi is a hybrid product, hybrid fintech product, which aims to bridge the gap between DeFi and TradFi, and yeah, that's about it.
Hi everyone, I'm Mounir, founder of ParaSwap. ParaSwap is a middleware that allows traders and developers to access decentralized liquidity. We've been since 2019 and recently also expanded for institutions to allow them to also trade on chain while still being compliant.
Cool, thank you everyone. So maybe just to kick things off, obviously 2022 was an interesting year. I think many people learned about the risks and limitations of centralized services within the blockchain world for obvious reasons. And a lot of commentary that came out of that was DeFi is going to be the natural beneficiary of this as people learn the hard way, you know, not your keys, not your coins, etc. So I'd be curious to hear from you guys, like how that's begun to play out in your own projects and your own experiences. Maybe kick off with Francesco, keen to hear kind of the 1inch story in the last few months.
Yeah, it's been a tough year for everyone, and when these things happen, it's not good for the overall ecosystem, be it SEX or DEX, doesn't matter, it's not good for anyone. Now, you mentioned FTX. What we saw after the FTX debacle was a huge increase in volume. I remember the day after the FTX collapse, we had roughly 2 billion in volume in 24 hours, and then we started having roughly 1 billion per day for the entire weeks after this. We were coming from roughly 300-400 million per day before, and then we started monitoring this trend, and what we're realizing is out of the overall market volume, there is a small but constant shift from centralized exchanges to decentralized exchanges, mainly to many protocols like, of course, ParaSwap, Uniswap, aggregator like 1inch, and this is about 1 to 2% more every quarter that we'll be monitoring, and we think this is here to stay. That's a function mainly of two things, in our opinion. Number one, consumers being burned by FTX and others, therefore losing coins that they thought they had, but they didn't really have. And therefore self-custody is leading to a move to DEXs. And also an overall experience which is getting better and better from a UX standpoint as well. More people prefer to use DEXs, it's quicker, it's safer to a large extent, and that also explains the overall trend and shift which we have been seeing over the last few months since Q4 of last year.
curious if anyone else has noticed a similar trend. I mean, Mounir, how has stuff been with ParaSwap in the last few months since FTX?
Yeah, I definitely agree with Francesco. We've seen a huge switch from centralized exchanges to DEXs. Some users switch for good, and especially that the technology right now is ready. Unlike 3 years ago, where all we had is Ethereum blockchain with big spikes in gas fees. Right now we have layer 2s, we have ZK rollups, and we have exchanges that are hybrid, that look exactly like centralized exchanges, similar, for instance, DYDX. So I believe users have much better choice to use DeFi than centralized exchanges in 2023 and 2022.
Can I jump in?
Please.
Okay, and like, congrats to you guys. Like, that's amazing that it's happening. But I think that we're in this stage where, you know, we're in the bear market. Last year was a horrible bear market, and we're kind of taking low transactional volumes and like lower liquidity than we had in bull markets. And I just don't want DeFi running a victory lap. Like, oh, we got, you know, FTX's volume, and like a lot of that liquidity, a lot of that volume is still on centralized exchanges. So for example, Bybit got a lot of the altcoin trading volume after the FTX collapse, right? And I think the trend is going our way, but what's gonna happen when my mom asks me, you know, should I buy Bitcoin because it's at 80K now, right? Like, what happens then? Are people gonna be using DEXs, or is the new wave of people coming to centralized exchanges and we're just gonna repeat the problem? So this is kind of my thesis on this. It's like, great, but we're doing this based on the volume of the hardcore people that stayed throughout the bear market, and what happens when the next wave arrives. Like, is DeFi ready for this, right? Because right now, maybe it would be great, but I doubt it, just based on the last, 8 years of being in this space. Like, it's still gonna be problematic. Like, we're still not fixing a lot of the issues. We're still not fixing a lot of the UI and the UX problems. Like, it's getting better. I just had a conversation with my friend before this panel, and he said, I tried to interact with MetaMask yesterday because they're building a different product, and the user experience is horrible. And in my experience, I'm like, yeah, but it's better than it was 5 years ago. But it's still horrible. Like, I'm not gonna tell my mom to use MetaMask, right? And what happens then? Like, people want that security, quotation marks there, of I want to be able to log in with an email and a password, and if I forget my password, I want someone to remind me of that password, right? And what happens then? So just something to keep in mind.
Can I jump in there?
Go for it.
So in terms of like users, we're launching on mainnet in a couple of weeks, so we don't really have, we don't really have users yet. Well, we will, but I completely agree with you. I think in crypto we underestimate just how intimidating simple things like a simple AMM like Uniswap are to non-crypto people. Like, I've got friends who, when first trying to use Uniswap, call me up nearly having an aneurysm. Like, how do I use this? This is so complicated. I'm like, it's literally just 2 tokens and you press swap and that's it. But ironically, in a weird way, a complicated KEX where you see like an order book and a chart, and you've got like limit orders and stuff, that seems more homely for them. So I think that DeFi sort of needs a user experience revolution, and I think we need to give them what they want, which is basically a KEX interface, but on-chain. And that at Gridex, that's what we're trying to do. If you open up a front end that's run by Gridex, it looks like a KEX, except you've got you keep custody of your assets. And we really overestimate how much people know about crypto. Everyone says not your keys, not your coins, but that doesn't actually get through to anyone. I know people who, while FTX was collapsing, they spoke to me after it collapsed. They were like, crypto's a sham, etc. I was like, why didn't you, when you saw the red flags were there, why didn't you just withdraw? They're like, what? Like, you do know that you can just withdraw your assets. You don't need to keep them on the exchange. And that was a completely alien concept for them. They're like, what do you mean? Like, it's on FTX, what can I do? So I think that we need to really just treat people, we really need to ease them into Web3 and make it easier for them to actually make that jump. Because right now, I think I completely agree. They're, in the next bull market, they're just gonna all be using KEXs again, and the cycle's gonna repeat.
Yeah. Uh, I also agree with what you guys are saying, but I think that there is a background story to everything else. It's the trust issue, right? So people do find difficulties using the UI UX, and sometimes they're not educated enough. But at the end of the day, what brings comfort to them with Sexis is that there is some kind of a corporate structure, there is some kind of a, let's say, regulation and whatnot. So I think that it should be a balanced approach. They should feel comfortable using DEXs, not only in terms of technological know-how, but also just being able to trust that, okay, the keys are with you, you own the coins and everything else, but you do need to have this educational background in terms of how you can use them exactly.
Got it. And the theme of DeFi user experience has come up a couple of times here. A couple of years ago, we invested in Zerion for precisely this reason, that access points to DeFi were just so obscure. Understanding what your portfolio looked like was nightmarish, and creating a consumerized UX that fintech rather than crypto natives understand gets you a long way. But it puts you in an interesting point now where you ask yourself, do we try and build for the next billion who are going to come into DeFi and create something that's sort of consumer friendly? Or do we focus on serving the kind of active Web3 citizens that continue to interact and to deposit today? So how do you guys think about that question, like right now, when it comes to product roadmap for the next few months?
I mean, it really comes down to what your target audience is, right? Like, are you building something like? And I don't have an issue with people going for the hardcore degens, right? Like, 4,000 APY, yield farming pool. Like, great. Like, if there's a market for it, then by all means build it. But who are you addressing this to? And just one aspect of what you said, are you bringing the next billion people into DeFi, right, or into crypto? Like that was literally like Celsius's line, right? And we all know how that ended up, building like. What was it, onboarding the next 3 billion users in crypto. So if you're building something for everyone, you're essentially building something for no one. It's the same with communications and marketing. If you're trying to get everybody to onboard, no one's going to onboard. And it's the same thing with our products. It's about finding product market fit. Who are you building this for? Who's actually going to use it? And a lot of companies also make the mistake of, especially in DeFi, because DeFi you have communities. Like, communities are super, super important. So like, you probably have your end user is probably a multiple of what your total community is. Like, that's something that I've been seeing. So are you asking them for feedback, right? Are you talking with their community members, because they're the hardcore users that are going to be using this? Are you making focus groups like on Telegram or Discord or whatever? An additional thing is that sometimes when you're building, you have this idea, especially if you've been building for a long time, you kind of lose focus, right? Because the market tends to verify your product and your service pretty quickly. And are you adjusting to what your community is telling you is one additional thing. Because I've seen a lot of companies that, we have our roadmap and we're building this product and we've been doing it for 2 years and we're not changing a thing, even though the market's screaming at us essentially that, hey, like, you need to adjust. So just some quick thoughts on that.
It's very interesting, and one of the complexity we have as well in 1inch or in general is, if we are solving for current users, we are not gonna solve for future users. And the issue is, in the S-curve, the early adopters of DeFi and crypto are way more advanced, as you were saying before, than my mom, which, by the way, if she calls me for 80K Bitcoin, I will take the call anyway. But if we keep improving what is good for existing users, we will not onboard new users. And we normally try to understand what are the barriers for users, one of which is paying gas. And it looks silly to us, but many friends are like, hey, I need to swap 1inch for something else. It didn't work. It doesn't work. Like, why? Tell me more. If you don't have gas, it doesn't work. So there was no Ethereum, there was no gas to be paid. So we launched gasless, which is a way to onboard more users and give a different experience. And now we start at 5% of the volume, and now 1/3 of the volume in 1inch is gasless. So we are trying to listen. But the difficulty again is, if we listen too much to our core users, we are gonna design something like a super sophisticated Porsche, again, to give to my mom, and she just wants a Fiat, right? So the balance is very difficult to strike sometimes.
I actually think that in order to expand, the user base and everything else, as you said, I do agree with you that we cannot concentrate only on the current users, but we need to think of a way to attract new ones, right? So, to be honest, in my personal opinion, is that we need to find a way to interact with the real world economy. I mean, we're not two separate universes. People, the economic factors are the same everywhere. So we need to think of, bringing also institutional adoption through the infrastructure which we are offering. So people need to understand that we're not just trading and just collecting fees, but we're rather participating in the economy. We're producing something. We're part of the GDP as well.
Yeah, but in order to bring on institutions, you need to bring on retail, right? That's how it's always been in crypto.
It's kind of like the egg and the chicken, though, because larger names are basically going to bring the masses as well. Like, so if you recognized companies which are entering the space, then of course the masses would follow.
No, I totally agree. But like the last 12 years, right? It's like, who was first in Bitcoin, who was first in Ethereum, who was first, right? And like retail, and it's retail kind of draws the short end of the stick here, because I was gonna say I still consider myself retail sometimes, but we're the guinea pigs, right? Before the institutions come. So if we mess it up for retail, we mess it up for everybody else. And every time, there's a bubble and some institution, like Michael Saylor is a great example. Like, you have crypto Twitter going to town on him for basically like, how are your Bitcoin buys going, right? Like, we can't build just for institutions if we forget about retail.
I would say something also is, as any startups, Web 2 or Web 3, we cannot be everything to everyone. So in DeFi, we can choose either to build a PayPal, Venmo, or maybe to build a Bloomberg or any tooling that is used by professionals. And professionals, they can do the extra mile if there is the right incentive, whether it's solving the right problems for them, whether it's bringing whatever value they are seeking. So I don't necessarily agree that DeFi has to be friendly to all retail, because it's simply a matter of whether you're building in the first place for retail or you're building for other professionals. Like, say, take a DEX like Curve. Curve doesn't have to be built for retail. Curve is a protocol that it's built behind the scenes and can be used by like Zerion, 1inch, ParaSwap UIs, and maybe also 1inch in ParaSwap can be used only on the backend as middlewares, so that we build layers of abstractions, and the Zerions, Argents, and others can build the PayPals and Venmo doors. So I believe there is a nuance in where to whom we are building.
Yeah, I think we definitely need to. People aren't exactly rushing into Web3. They're still like it was said. There's still people are like, oh, can I trust this, etc. I don't have like a login. I don't have a password. But the thing is that I think while we need to do some level of adaptation to bring on those people, DeFi still needs to stay DeFi. It still needs to be, you connect your wallet, you don't do all of that login stuff. And the thing is that eventually that will become the norm. Like I remember in the early 2000s, if I wanted to buy something on eBay, my parents would go crazy. They'd be like, no, how are you going to put our credit card details online? They're going to steal it, etc., etc. Now everyone buys stuff online. But initially, we all forget that everyone was apprehensive to buy anything online. They're all like, we're going to have our account absolutely rinsed. So I think that we need to, we need to stick to the core principles of DeFi. And because if we go too much to the other side, then what was the point of all of this? If we just go back to a Web 2, then we've sort of like lost the whole point of what we've been trying to build.
But also DeFi can be leveraged by Web 2 companies like traditional Web 2 fintech dApps that can use DeFi behind the scenes as a technology.
Yeah, no, I definitely agree, and that's the beauty of DeFi, that you can you put something out there and you might have one intention for it, but someone else has got a better idea, and they can compose your protocol. Like you were saying with Curve. Curve doesn't need to be for retail users. So for us at Gridex, basically what we do is we just put order books on chain in a way that's actually viable. We have an idea that a front end would be powered by Gridex, and they can use our order books. But that doesn't just mean that we think that every retail user, etc., trading on a DEX needs to use order books. Like, these front ends will probably end up having our order books and also aggregating from other DEXs, things like 1inch. And so I think it's just about, the important thing is that you build the infrastructure, and then people are imaginative. They'll come up with ways to use it probably better than we could.
That you wouldn't even expect.
Yeah, exactly.
Yeah, so I guess we're kind of getting at this idea here that DeFi is going to naturally be many things to many different people. There will be institutional products, there'll be retail products, there'll be consumer-facing end-user applications, there'll be the infrastructure that's built underneath. So I guess as we look forward, I'm curious to understand where you guys are most excited about what's going to drive adoption in the next couple of years that kind of hasn't done historically. Might that be new use cases, new segments of users that you think are going to come online? Any other kind of catalysts in the industry that you think are going to lead to the next, DeFi summer, or perhaps something more sustainable?
I think one of the catalysts won't be what we find the most exciting as a catalyst, but it will be regulation in a sense. And I know it's a very contentious point, but in reality, when we say we want institutions on board, then we need to have regulations on board. We can't have one without the other. So there might be other fancier and more sexy catalysts for adoption. But I remember when in 2017 I was using BitMEX or Kraken with no passport, and at a certain point they were like, hey, do you want to keep using us? Then you have X months to give us your passport, or you're welcome to go. So maybe at a certain point this will happen, either because someone is forcing this, or because on a voluntary basis this might be a way to proceed. And if and when this happens, then regulations will, the institutions will come, and banks. We speak to many banks today. They would love to be part of DeFi, get the yield, participate. They have a lot of clients requests, but they just can't. So we're building a permission version for this reason. And again, this might not be the most exciting reason for a DeFi growth in the future, but it's going to be one of those. And when these institutions come, they bring more innovation with them. For example, JP Morgan is already tokenizing real assets, and they're putting the assets in liquidity pools. But in order to do it, they will want to do KYC and ML. So this goes a bit one with the other. It's difficult to choose one if we are not willing to then lean forward towards regulation a bit, in a sense.
Yeah. Actually, I also think that regulation is going to be a big part. It is inevitable. We cannot be a separate universe where nobody looks into us. We're living in a very highly structured society. So if we want to address the masses, if we want to grow the space, sooner or later we will have to be compliant to a certain extent, right? So here probably the main aspect would be that we need to educate, and probably explain to regulators exactly what we're doing and why we're doing it. So we're trying to bring innovation, trying to bring technology to the sector, but yeah, it's not some kind of a dark magic, and we're not doing something wrong. We just need to have a structured way around it.
Yeah, just with regulation, it's so nuanced, and I definitely agree with what you guys said, but just keeping in mind that we keep saying regulation. I did one of these panels in San Francisco end of last year, and now I'm in Europe. So when I say regulation here, when I say regulation there, those are two different things, right? And we keep saying regulation like it's global, encompassing regulation, one size fits all. And that's really problematic. And when you say to be compliant, okay, be compliant where, right? That's another aspect of it. You guys probably saw what happened with staking as a service on Kraken and the SEC coming down on that, right? Like, a lot of people wrote like, oh my God, the SEC banned staking. No, they banned staking by centralizing, well, not really, they just fined, there was a settlement, $30 million settlement with Kraken, but they basically said, we don't want retail investors touching staking as a service because we don't know where the APY, where the yield is coming from. So the actual problem for the SEC is, again, going back to Celsius, where is the yield coming from? Is your deposit the yield? What are they doing with that deposit? And that's the actual problem here. So when it comes to regulations, there will be some winners. Like, this is a big part of my thesis. I've been very, very bullish on the EU in general because it's not a wait and see approach, but I think it's as close to a wait and see approach as we can get, especially with DeFi, especially with MiCA. And that's not what we have in the US. We have regulation by litigation, right? Like what happened with Gemini. Come to the SEC office, we have a few questions, and then boom, they get the paperwork, right? They get charged. Like, you can't regulate DeFi by litigation, and that's exactly what we have in the US. And that's one of the problematic things. So when it comes to regulation, like, you just really need to understand the nuances. I know a lot of these DeFi protocols are simply blocking the IPs of US users, which is an interesting step. And then again, we're, you know, like we joke sometimes, and it's a sad joke, it's very dark humor, but if you look at a lot of terms and service, you have the US next to a bunch of blacklisted sanctioned countries, right? Like, this is the world that we're living in. And so is DeFi going to move out of the US is kind of how I've been operating, and a big part of the thesis that I've been formulating over the last year, because we're already seeing a large exodus of talent, of capital, and if this continues, then, you know, is EU going to be the go-to DeFi regulator, which would be really exciting for us, right? Like, everyone based in the EU, but just nuance and regulation, super, super important. Compliant, what does it actually mean? Because it means something absolutely different, like, wherever you're based.
Yeah, exactly. I think there's a lot of regulatory blunt instruments that are trying to be applied in DeFi. Like, if you look at the Howie test, like, is a DeFi token a security? Well, that's actually a very difficult question to answer, and it's very context dependent.
Stable coins now, right? Like, how does a stable coin like BUSD fit into the Howie test?
Yeah. Can I just add that? So the purpose of regulation is supposed to be to protect users, right? And that when it comes to nuances, I completely agree, because thing is, if regulators don't understand what DeFi is and how it works, it's not going to, whatever regulations they do put in are not going to protect users. So, for example, I remember Vitalik spoke about KYC on DeFi front ends last year, and I largely agree with him. If you have, say, you go to a DEX and it asks you to KYC, okay, the malicious people using that DEX, who are always probably more technical than a docile user, they won't go through the front end. They'll just interact with the smart contract directly. So the only people that you're impeding are normal users. Now, there are positive ways to have regulation. For example, the law could require that a DeFi front end has information about the audits of the smart contracts that you're using. Perhaps even things like some features are gated by like knowledge-based tests, which, I mean, of course, like you can get past that as well. You can just get someone else to take the test for you. But the thing is that just getting people before you use leverage, do you know how leverage works, et cetera, et cetera. If they still decide to go into it, even though they don't know, then that's on them. But it's our responsibility just to make sure that people are aware of the risks. They're aware, am I am I interacting with an audited smart contract? Where is the audit, et cetera. That stuff would actually protect users. But having, send your passport before you can use this, like that's like police tape that a criminal is just gonna go over. So I don't think that would actually be useful regulation.
There's the ideological aspect to that too, right? Because if you have a DeFi protocol or DeFi, decentralized finance, and the majority, like I don't think a lot is done in decentralized. Like there's a lot of people trying, but like we haven't, especially from a user experience perspective, we haven't really like figured it out. So whenever you're instituting KYC and AML, like you're adding a centralized entity to a decentralized protocol. And that's a lot of the problems too, right?
I mean, I would say, like, even though I'm not in favor of KYC on front ends for the reasons I just stated, but I think if that was to happen, probably the best way to do it would be with some, ZK proof ID solution. I think that would, that would be leaps and bounds better than just having, a centralized database that can get hacked and stuff. But I mean, that's still not optimal, but I hope that if they do go with that at least they would embrace that technology.
I mean, there's a conversation here around DeFi ideology. Is KYC and AML compatible with being fundamentally decentralized? Curious to get your view on this. Do you think that we as an industry have just been too dogmatic about the idea of decentralization and kind of held that up on a pedestal at the cost of building products that work for people?
100%. Like, I think, like, I talked about this very, very recently. Like, if you notice the narratives over the last few years, it's also nothing is ever as decentralized as one would want. Like, a Bitcoin maximalist is going to trash, Ethereum because, oh, there was a pre-mine, how do you function with a network that is fully based on AWS, right? So nothing is ever decentralized as we would like. And at the end of the day, it's about the user. Like, are you using this? Like, I much rather use a network that's less decentralized than Bitcoin, but still more decentralized than a centralized institution such as a bank, right? I think that the middle ground here is super important, because if we look at the narratives over the last few years, like a lot of the internal struggles that we have in crypto come from tribalism and maximalism and one camp, not working towards a common goal. Like, I remember in 2016, 17, when I really got into this space, like it was much more ideology based than it is now. Like, we're improving the world, and it's like that meme. It's like the Wojak with the brain, and he's like, we figured out the Byzantine general problem, and crypto today is like, oh, dog, coin has dog on it, gotta buy it, and that's kind of how it's working. So nothing is ever going to be as decentralized as we would like, but what does it mean? It's like a unicorn. It's elusive, and it's never going to happen, and there's always going to be another camp that says, like, oh, it's centralized and I'm not going to use it. So user experience, scalability, high throughput, low cost, those are the things that we should be focusing on, and there's a lot of projects that are focusing on that right now. And yeah, for a maximalist, it's not going to be decentralized enough. But if you're still going to get hundreds of thousands of users and you're onboarding new users with phenomenal user experience, I think that's what we should be focusing on right now.
Do you think it's going to be fine if we still do KYC/ML and we remain decentralized, or would you say that it doesn't work for ideologic and/or business commercial reasons?
Again, it's what's your customer base and what's your product, right? Because again, it's the nuance aspect, right? So if it's something like what we're doing, like which is on-chain raises, like yeah, you need KYC. Like I've talked to startups, like when we were figuring out AngelBlock, we're like, okay, like how decentralized are we taking this? So we built version 1 on Ethereum, but we're multi-chain by design. But we were figuring it out, and we talked to startups that want to raise with us, and we're like, so how important is KYC to you? They're like, very. Like, we're not letting anyone on without KYC, because then if you're not incorporated in Discord, but you're incorporated in a real country, like many of these crypto startups are, then you want to open a bank account. It's like, okay, cool. Where do you have the $10 million from, right? And if you don't have KYC, if you don't have signed SAFTs, that becomes a problem. Even though, in theory, from a technological standpoint, what we're doing is totally doable without SAFTs and KYC, right? Because it's all on chain. But it's a whole other slew of problems that arise for our customer base, which is the startups, right? So I think it really depends what your product is, but I think a lot of the regulatory crackdown will come with the institution of KYC. But as you said, like, there's always the backend, there's always the API, there's always the blockchain, there's other ways of interacting with this. So it's not going to stop everything, but it might make it a bit better.
Actually, speaking about user base and how we can adopt like the technology within the space, you can use it in many different ways, right? So, for example, in our user base, yeah, we do need KYC. It's normal. Well, we do want to, operate also in the real world segment. We do want to fund SMEs, which are, comprising 95% of the economy as a whole. So, right. If you want to interact with the economy, if you want to make bank transfers and everything else, you do need KYC. You do need to explain how the funds are being there, what is financed, and everything else. So if you want to gain access to the public and actually be part of the GDP, let's say, you do need to have it.
I think ideologically, in terms of KYC and DeFi, I think maybe you can separate it into, is this DeFi being used by institutions or by retail users? I think if, for example, you have something like 1inch Pro where it's like geared towards institutions, institutions are, you know, already in TradFi. So KYC for them isn't as big of a deal. What's worrying is KYC, you know, for a normal person who, you know, has not done anything wrong, but they're being restricted from having the, you know, control over their money. But, you know, an institution's regulated anyway, so you KYC them, that's not that big of an issue. Like, it's not like they're anonymous or anything like that. So I think that if KYC was to come, I think it would make sense to have regulations for things that are geared towards institutions that are separate from things that are geared towards retail. So maybe we might start seeing protocols have, you know, like a version for institutions and a version for everyone else.
Yeah, this is the case already in multiple protocols, MetaMask and many others. I think what you said before is what's gonna happen, or what I hope is gonna happen, which is a ZK-based KYC, which might be a compromise between the need to still prove who you are and the human need not to be known by everyone at the same time. So a ZK-based system, not sure which one will win, but that might be the solution to this.
Yeah, and I think that because that would be on-chain as well, then that's the only feasible way that would fix the problem of people just going straight to the back end and doing it that way. And I mean, yeah, that would make sense. Like, if you just want to check, is this person an American or are they not, then yeah, you just have a ZK proof for that.
I think coming back also to first principles, it all depends on what we're building. If it's a base layer protocol, like a Curve or an AMM, I don't believe it's even efficient in a product perspective or a technology perspective to have native KYC. But if it's a customer-facing product or if it's an institutional-facing product, bringing KYC is part maybe of the solution that the customer or the end user is asking for. So if we're building a product for institutions, well, what we're solving maybe is not like the KYC. I mean, KYC is just a tool to onboard these guys, but we're bringing instant settlements, we're removing the counterparty risk, and to onboard these guys, we have KYC. So I think it has to be contextual, and maybe you can have a parallel with the streaming industry, where it started with BitTorrent, Napster, and it was the Wild West, and the whole internet was downloadable, legally or illegally. That's a matter of ideology as well, but well, officially it wasn't illegal, but it led to having Netflix, led to having Spotify in all this industry, but the base layer still exists. Like, we can still now use torrents for legitimate and illegitimate cases, and BitTorrent doesn't have to be KYC, that doesn't have to be regulated per se.
And one important thing is, like, if one thing crypto has taught us, and it's the old Bitcoin mantra, if you don't like it, fork it, right? So if we all institute KYC, AML here, right, then there's gonna be a whole array of competing products incorporated in the middle of nowhere with a similar UI, similar UX, maybe even better, that don't require that. And that's how crypto has always functioned. So it's important, like, not to overregulate, not go overboard here, because there's always going to be someone that offers a really similar service, might even be better, that doesn't require the same regulatory compliance as we're talking about right here.
How much do you think that, you know, if you don't like it, fork it, is dangerous? I mean, in a way, it's one of the founding principles of all blockchain technologies, right? The native composability of everything. But if we move towards a world that is more regulated at the consumer end, that has some protective provisions built in, but then we also have a long tail of folks building on the side who are continuing to potentially bypass regulation as quickly as it's instituted, do you think that potentially introduces fragility into the system?
I mean, if crypto has shown anything, it's that it's anti-fragile, right? Like, I know Nassim Taleb blocked me on Twitter, but like, I'm still a big fan. Antifragile, great book. But basically, I think it's, I'd like to think that we're all like, free market economists in the way that we think because we're sitting on a DeFi panel. So I think it's always up to the market to decide. Like if the market wants it, great. If it doesn't, it's not going to support it. And since we're in the topic of Bitcoin and the DeFi panel, which I think is really cool, personally, what happened with BSV, right? Like the market, it took it like 2-3 years, but the market verified that, no, sorry, you're not the real Bitcoin. Same with Bitcoin Cash. Like Bitcoin is Bitcoin. And if you don't like it, fork it. Cool, we forked it, didn't really work. So I think the market's always going to verify, and I think that's the beauty of this space.
I think DeFi in a lot of ways is sort of similar to STEM in that, say you make a protocol, you put it out there, someone can fork it, modify it, etc. That's a good thing. It's just the same thing with science. Someone might write a paper that no one cares about. 50, 100 years later, someone comes along and is like, oh, I need this bit of maths for my physics theory, or this piece of physics, will have this application in chemistry. So the thing is, and that's how we have evolved as humans, because science is composable. So if we apply that same thing to DeFi, that will allow us to move forward. I mean, it's worked before, so why not now with finance?
The thing is, I do agree with what you guys are saying, but when you think about it, okay, fork it, you're going to incorporate in some country which doesn't require KYC, AML, and whatnot. But at the end of the day, the user still needs to interact with the economy, right? So at a certain point and at a certain level, they will need to cash out and they will need to, pay for something, right? So at the end of the day, when you think about it, it will become more difficult for them if they use this protocol, which is in some really, really different country, which doesn't require anything. And here comes also the question of taxation and, like, what do you do with your profits and whatnot. Like, this cannot go on for a really sustainable time, for a long time. It's just not sustainable. If you want to, I don't know, buy a coffee, at a certain point somebody is going to ask you where's the money coming from, right? So even if you're using a protocol which is registered somewhere in a very, very less regulated part of the world, then it's still a problem, right?
Well, there's a difference between money laundering and KYC. That's another thing. So where's the money from still happens if you have KYC instituted into your whatever service that you're providing, right? So that's one thing. And I'm not sitting here trying to argue for the fact that DeFi should stay totally outside of regulatory compliance. I'm simply stating the fact that over the course of the last few years in crypto, we've seen that if a institution, whether it's a centralized exchange or it's a protocol, if they take a route that their user base doesn't agree with, they're always going to find an alternative. That's all I'm saying. And I think we're coming to that point, but right now with, not to get too philosophical, but what's going on right now with globalization and everything else, there's a great book, The Sovereign Individual, and basically states that the Don Quixote of the 21st century will not be a knight errant fighting for chivalrous values, it will be a bureaucrat in a brown suit looking for someone to audit, right? So we do have this increased mobility, and what's going on in the US right now, you have a bunch of Bitcoin and crypto millionaires who are saying I do not want to be a part of this system. And this is another thing that Andreas Antonopoulos said. You vote in two ways. You can either vote with your actual casting a vote with a ballot, or you vote with your money. And if you don't agree with a system, you can always exit, right? So you can either vote or you can exit. Those are two kinds of votes. So if you don't really like the direction something is taking in the jurisdiction that you currently are in, you can always exit. So I agree that we're coming to that point, but there's always going to be an alternative, always.
Yeah, of course. I mean, globalization is a certain part of it, but I mean, after all, there is so many countries which you can exit to, and if you don't like it, I do agree with that. But at the end of the day, we're part of a society, right? I mean, how many people are using Bitcoin or, as a whole cryptocurrency? It's out of 7 billion, what? 10, 20 million maybe? I don't know, even maybe a bit more, I don't know. But still, it's a small percentage. So if we want to have a structured, and really be part of the global economy, if we want to have like this institutional adoption and overall adoption, we do need to figure out a way where people will feel comfortable entering the space and will be able to interact with the rest of the businesses as well.
Yeah, one thing that I think I'd like to, since we're running short on time, is like one thought that I'd like to leave people with, and it's an open-ended question, but it's basically, what's the threshold between decentralization and us turning into a centralized bank currency, right? Like, there is that threshold. So I'm not saying that what you're saying is not going to happen, right? Like, yeah, I would like regulation. I like good regulation. I like people to not have problems with KYC, and maybe if it's CK based, then it's going to make more sense. But where's that threshold between, yeah, we're a decentralized system, but KYC, AML, and everything else, and we're essentially just as regulated and invasive as the centralized bank currencies that are going to be introduced?
I know we're running short of time, but the thing is, for me personally, at least in my opinion, the technology and the effectiveness, fast transactions, low costs, like this is more than enough to attract people.
Maybe just as we bring things towards the close, it'd be good to kind of think a little bit more pragmatically about the environment that we're in. I mean, obviously everyone in this room continues to build through a bear market. Curious to kind of, from each of you just here, what is the one piece of advice that you have for other founders, other builders at this point in time?
Save cash. I'm coming from a traditional finance background. I spent like 2 decades in Procter & Gamble, CFO, and the only golden rule we had is cash is king. Nothing else matters. So we see many amazing companies building things, but then they run out of cash because they did an amazing round day or pre-seed in a bull market, then you spend it in sushi and boats, and then you run out of money because you think the bull market is forever. So I would say number one is save cash. Think like you have 3 years of no revenue, are you able to survive? We see many of those who didn't think in a 3 years no revenue mindset. And the second is build things that people want. We see every day amazing application for grants or money, and they are solutions to something which we don't see as a problem. So think problem first, what do people really want, and then spend money accordingly, building something which is fixing a real issue, be it safety, speed, UX, whatever, but find a problem for your solution before you spend the money.
Stay away from AI. I know you guys want to add, if you're building right now, you want to add AI to whatever you're building. Don't do it, trust me. But in general, if we're in a bear market right now, there's less money, there's less hype, there's less everything going on right now. The people that are with you, your users that are using your product right now, the community that's in your Telegram chat right now, or on Discord, wherever you have it, those are your hardcore users you should be listening to. Bear markets are wonderful for building a community because it's the people that actually care that stay with you. So if you can build a community in a bear market, if you can ask for their feedback in a bear market, I think that's one of the coolest things because those are the people that, like, yeah, they're going to stay with you during the bull. And just in general, from a personal standpoint, like, this is the best time, not financial advice, obviously, all that good stuff, but like, you should be allocating in a bear. Like, if you're coming in, when Bitcoin is at 100K again, and you're like, oh my God, this is the next, 100,000x coin. Like, no, it's not. Sorry, it's really not. So like, this is a great time to reassess, reevaluate, make sure that you're building something that people want. If you achieve product market fit in a bear, like, trust me, you're going to have product market fit in a bull. So just take it easy, build as quick as you can, ask for feedback from your community as often as possible, and just make sure that you incentivize and that you appreciate the people who stood with you when everything, went south.
Yeah, I think it's actually a blessing to start in a bear market rather than in a bull market, because in a bear market you don't have, you get some narratives, but nowhere near as much as in the bull market. So instead of sort of just being taken along with the stream, you're more likely to actually build something that's needed. While in a bull market, and you can see this with like lots of projects, you start off doing one thing, the narrative comes along, okay, we're going to pivot this way, and then that narrative dies, and then okay, we're going to pivot this way. And the thing is that as soon as something's successful in the in a bull market, the next day there's 200 copycats. And I think it's much healthier to have all of this stuff flushed out. Like I like to think of like market cycle and the market as like a body. All these like copycat deadweight projects are like toxins. Eventually it builds up such a level that the body gets sick, needs to like purge, needs to flush all of these out. And the things that really need to remain there will remain there. So I think you're much more likely to build something that's actually good in a bear market than in a bull market. Even though you can get a lot of funding in a bull market, it's sort of like the curse of winning the lottery. Like you want more money than you need, more money than you deserve. And then it just backfires on you.
Exactly. Look, I think that's a really good note on which to finish. I think it's an interesting time in the cycle. We're now learning where the real value is getting created and where the noise is. And for those who are building, keep the faith. For those who are investing, now is the time to put capital to work. Thank you, everyone.